Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what in the heck is happening, because this was a very painful day. A little bit of buying actually happening towards the end of the day here, which is nice to see. But overall, an extremely painful day. So let's go over it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is below, where I share my intraday thoughts, like massive posts like this, massive posts, all over the day today. Today is obviously a large day, but the link is below, $3 a month. I share that as we're moving throughout the day. Let me go ahead and scroll down here, because I am going to be using these notes to kind of remember what I'm supposed to be talking about with you guys, because there's a lot to talk about. So let's get into it. Tesla closing the day in just a minute, but looking like we'll be closing at about $220, $221 on the day, which unfortunately is still going to be a down 9% on the day. And that's not even including yesterday, which was down another, what, like 4% or something like that, 5%, something along the lines of that. We're down almost 15%, ladies and gentlemen. From peak to trough, I believe we're actually down 15%. From yesterday's peak to today's trough, we're down pretty much exactly 15% in 2 days. That is a substantial fall. That is an extremely aggressive fall, but not ridiculously surprising. We talked about how, we can potentially bounce off this area, right? Depending on if earnings is good, but we could potentially also gap down. Unfortunately, not only did we gap down, but it was a pretty severe gap down as well. So let's discuss it. So earnings went, obviously, not so good. Clearly not so good. Very pessimistic call. Very just kind of a doomer call, if that makes sense. It's very depressing, honestly, to listen to it. Elon was sounded extremely just unenthusiastic, I guess, not very optimistic, which I guess makes sense with the current macroeconomics, the wars and everything. It's just, the world is kind of a shitty place right now, honestly, but this is the worst case. These are the times where it's really, really bad, that as hard as it is time to buy. It's a good time to buy. Not financial advice, just my opinion, but I am a buyer here, and I am going to continue buying if we continue falling, which I think is a real possibility. So let's talk about it. There's a lot to talk about. So first things first, we fell out of this massive channel. That was a scenario that we obviously wanted to avoid as bulls. Obviously, it is currently in the process of happening. So there's two ways I look at this. One is, both ways are bad, by the way. There's no real good way to put it. I guess there's one good way to put it, and that's we essentially pull off of Netflix, where Netflix also did the same thing. Massive channel, fell back down, obviously sold off, and that's kind of what we're doing right now, just much faster. And then after earnings, it skyrocketed back into the channel, and then it's seemingly holding within the channel. Technically, that is a possibility. That's the bullish scenario for Tesla. I don't see that happening, not after what we heard yesterday. So the chances of that are 5%, honestly. But the things that are more realistic that I'm seeing here are obviously just, they're both bad. One is just worse than the other. To me, I look at this and I'm thinking, it's bad. Obviously, it's bad. But how bad? Right? That's the question. How bad is it, and how bad can it get? That is what I am thinking about. That's, moving forward. So let's discuss that. The first option, which is just the bearish, the flat out, it's bearish. It's not the worst thing, but it's definitely bearish. Is going to be as follows. You can view this ascending channel as just nothing more than an ascending channel, a rising channel, whatever you want to call it. We obviously ascended in it. We had beautiful bounces since the lows all the way up to even close to 300. It was great. Now we're done. Now we're going to cool off. Now we're correcting. Perfectly normal, just a part of the process. It's a pretty quick correction, honestly. It's happened really fast. But nonetheless, we are correcting. And that, all it is the fact that, now we just look at, okay, well, where can we potentially base, right? You don't look at this in any other way other than the fact that we finished uptrend. Now we're going to do a little bit of a downtrend, a little bit of a correction, some probably sideways action as well, before we base and we start making our next leg higher. That's the typical bearish, right? And we'll talk about how much lower we can go, of course, very soon. The second take I look at this is on the weekly. This is the very bearish one. This is the bearish take that you could look at this not really as a ascending channel, though it technically is. You're also looking at it as a potential massive bear flag, right? We talked about this many times in the past. You can go back to my videos. I've talked about this so many damn times. But this is still technically a valid option. I'm not in this personal camp. I don't think it'll be that bad, but you can potentially view this as a massive, massive bear flag. It's still realistic. It's very, it can happen, and it's probable. But essentially, you're looking at this as a massive bear flag. And if this were to play out like that, at the very least, the thing is, the issue is normally the way you measure it is you take the pole from the breakdown and you go like this. That would take us down to negative. Obviously, that's not going to happen. So that's why you don't want to look at this in a literal sense of okay, you measure the pole from the breakdown and how low can it go. Obviously, it doesn't work in this specific scenario, so we're not going to do that. But if this is an actual bear flag and that's the way it plays out, which again, I think is a lower probability of, but if it were to be the case, I think we'll see 150s. I think this will take us to about 150s. That is the very bearish take. There's an even more bearish take, which I'll go over very soon. That is the ultimate bearish take. But this is the more bearish take and the one before that was just the bearish take. So that's that, right? That's the way I look at that right now. Let me go ahead and scroll up to make sure. I really want to I don't want to miss anything. There's a lot to talk about, and I really want to make sure I touch on every point that I want to touch on. Sticking on the weekly very quickly, there's also two perspectives here. The first perspective is the bullish one. Let's go ahead and talk about this one first. So we have I talked about this one many times as well. Obviously, just, you know, it's obviously a little bit larger. I'm just for the sake of demonstrational purposes, we'll keep the size as is, but obviously the head is a little bit bigger. But the point is, the weekly time frame, we have a potential inverted head and shoulders pattern being set up right here, right now, right? And it can go as low as pretty much almost $200 per share and still be valid. This is the bullish scenario, right? As long as we hold above pretty much $200 per share, to keep it very simple, which is also roughly where this 200-day moving average on the weekly time frame is, which should in theory be a very powerful support, in theory, of course. I wouldn't be surprised if we break slightly below to 200, because it's at about 207 right now, but regardless, as long as we hold pretty much roughly $200 per share, and we don't go too much lower than that, like only a couple of dollars below is fine, but essentially around that area, this inverted head and shoulders plays out, well, not plays out, holds. To play out, you really want to be breaking above like 270 at least, honestly. But the point is that this holds. This is a valid pattern. It doesn't break apart, and that's what the bulls really want to see. And if of course, big if, but if it does hold and it does eventually play out, phenomenal situation, phenomenal buying opportunity. Just my opinion, not financial advice. Phenomenal chance here, right? Really, really, truly a phenomenal opportunity. So just keep that in mind, right? That's the bullish scenario. Now, to kind of build on that, actually, before we go to the bearish scenario here, we also have, if we zoom in here, a potential hidden bullish divergence. Now, you might be asking, what the hell is a hidden bullish divergence? Well, that's when essentially the oscillator, or in this case, I guess, really the RSI, is making lower lows, which it is, right? It's currently making lower lows, but the stock itself is not. So you can see here, we didn't actually make a lower low, right? We're obviously higher than this candle over here, which is the two kind of low points, if you will, of this RSI over here. But this is the RSI is making a lower low, but the stock is not. That's essentially what a hidden bullish divergence is. They're usually a bit harder to spot, maybe hence the word hidden, but it's a good sign. This is a good sign for the bulls. This is kind of what you want to hold. Like, this would be pretty ideal as well. Obviously, it doesn't mean it has to, but it's just something to consider. I don't put too much weight into this personally, but figured I'd mention it nonetheless. Now, let's talk about the potential bearish situation here. So, this is like the really this is pretty bearish. I'm not gonna lie. This is I really don't want to see this to happen, because if it does, this would be really bad. But we'll talk about it anyways, because we try to avoid any bias here, even though I am a bull. Clone this, put this here. Let's go ahead and delete these for now, just so it's not too confusing. We'll keep that one there just in case. But yeah, so this is another option right here. So we could potentially be setting up. There's still a lot more work to be done for the bears in order to even start setting this up, but I'm kind of looking ahead right now. There is a potential that we encounter this scenario, which is just a head and shoulders pattern. This is the bearish variance of the head and shoulders pattern, right? This is the inverted is the bullish, the regular, if you will, is the bearish. We have the left shoulder here, we have the head over here, and if we break below 200, come down to somewhere around, maybe 180, maybe even 150, 160, whatever, and then bounce. Probably close to like 160s, honestly, 170s. We bounce, come back up to 200 and get rejected. Well, now officially, we would be setting up the right shoulder. And if this head and shoulders pattern takes into fruition, and this is the path we're going to be taking down, either we come down to the 160, 170, and then break back above 200 and nullify this pattern, or we don't, and things get really ugly. And if this were to play out, honestly, seeing double digits on Tesla would not shock me. I don't think that's probable. I think the chances of that happening are quite low, honestly. I really don't think it's going to happen. But it's absolutely not a 0% chance. Figured I'd mentioned it. Take that information, do with it what you will. But I'm just a messenger, right? So take that for what it's worth, right? That is something that I, again, don't want to just completely ignore. I don't want to have, at least I try to avoid, any obvious biasness here. I just say what I see and what can happen. So those are the main kind of overall broader things to look at, right? Now, let's talk about, again, let me make sure that I don't miss anything. Now, let's talk about what can actually happen kind of, a little bit more short term, right? So like I said, on the weekly, we are approaching a pretty massive area of support, right? We have, of course, the 200-day moving average on the weekly sitting around $206, $207 per share. That's number one, right? On top of that, we are approaching just overall the 210 to 200 level of support as well. Also a very crucial area of support that can be a phenomenal place to bounce and accumulate. Also, wouldn't be surprised if we see a textbook retest of this breakdown. Like I said, usually when you break down or out, regardless of a situation, in this case, the ascending channel, very common to retest it. So essentially, it wouldn't surprise me if we do something like this, roughly, come back up, retest this, maybe up to like 240s, 250s, something like that. And then we do something like this. Like this is one option that can potentially happen, right? This situation right here, come back up, retest, probably successfully. That means that the downtrend continues and then we make one more lower low. Obviously a very real possibility, but regardless of whether or not we make that lower low, wouldn't surprise me if we at the very least come back up to retest that. There's a chance that we pull a Netflix. Obviously there is still a chance we pull a Netflix where we come back down, we come back up to retest that, and we actually re-enter the channel, and then ends up being a false breakdown. That would be very, very, very bullish. Obviously, I don't think that's super duper likely. It's not impossible. Probably like a 15% chance, maybe 20 at best, in my opinion, of that happening. But at the very least, I wouldn't be shocked if within the next couple of weeks, we come, maybe even a month or so, we come back up to overall retest this overall breakdown, which, again, 240, 250, something like that is where it would take us. So take that for what it's worth as well. That is something that I think is, a very real possibility. I'm taking a look at my notes here, making sure I'm not missing anything. So that's the weekly time frame. Let's go back to the daily time frame very quickly. So on the daily, the 200 moving average is very similar to where it is on the weekly, a little bit higher, around 214, 215, something like that, right? Sitting right around here. Very, very nice area of support as well. I think there's a good chance that we bounce around this area. If we don't, I think we'll go obviously a little bit lower. And my main price target, the price target that I am really, really like looking forward to buying more shares at, is pretty much like between $210 and just $200 per share overall. That is where I'm really excited to buy more shares. I don't know if we'll get there. We very well might, absolutely very well might get there at this point. It seems pretty likely, but that's where I will be very excited to buy shares. I already have bought shares today on both my accounts. I will continue buying. If we continue falling, my next buy target will actually be somewhere around kind of 215. Honestly, we got very close to it, but I'm not rushing into it. I'm letting it happen. I'm letting it figure out how it wants to play out here. I'm not in a major rush here. I don't think anyone should be in a major rush here. I don't think, and I said this before back when we were still like around here, I don't think Tesla is going to moon anywhere anytime soon. I don't think we're going to the all-time highs or anything like that anytime soon. I think that, you can go back to those videos. I remember saying that specifically. And that's kind of what we're happening right now. Like, I don't think we're going to, best case scenario, I really think is just maybe we'll come back up to retest this breakdown, which is going to be somewhere around 240 to 250. And even then, I think from there, we'll just come back down at least somewhere to this area, at least one more time. Like, I don't think we're off to the moon anytime soon. At least I could be wrong. I hope I'm wrong, actually, but I don't think we are. So that's the first level. Obviously, 200-day moving average. If we break below that, I think we'll come down to about $210 to $200, which of course is a psychological level of support, right? I'll show you something else, but psychological level of support is just an actual level of support from the past. You can see over here, right? Beautiful level of support. A lot of trading happening in this area as well, which is a great area to buy in as well. And there is another thing I believe I said. Oh yeah, it holds that inverted bullish head and shoulders pattern that we just talked about on the weekly, which is going to be very good as well. And the last thing that I'll talk about, that 200 level that potentially can also make it a phenomenal area, is going to be this. If we take the Fibonacci, and assuming you're someone that believes that Tesla is potentially in a bit of an uptrend here overall, obviously, right? That's the wrong thing. That's not what I always think. I always confuse this for the Fibonacci because it looks kind of similar, the little icon. If you go from the lows, right, the lows that we had over here at almost $100 per share, and you take the Fibonacci, bring it all the way up to the recent highs, which was close to $300 per share, and you zoom in and you take a look. What does it tell us? It tells us that the 0.5 retracement is sitting at very close to $200 per share. You can see over here on the left, which again is another reason why I believe that level is a very crucial, important level where you can get a potentially phenomenal opportunity. Just my opinion. Maybe not, obviously. No one knows for sure. But it just, a lot of things really line up on that 200 level. So that's the real level I'm personally waiting for. And I'm not in a huge rush. If we get there, phenomenal. I will continue buying. If we don't, I'll ride with what I got essentially, after I've already bought extra here. So that's going to be crucial level to pay attention to as well, right? So those are going to be the most important things to talk about. On top of this, which is surprising, is the squeeze meter that we've been talking about, the squeeze indicator. Let's zoom in on it a little bit here, right? This, interestingly enough, there's two things to talk about. First and foremost, we're still showing red circles, which I'm completely shocked at. I don't know how, but we are, which obviously indicates that we're still somehow building momentum even after I don't know how it's still showing a red circle. I don't, but it is. Earlier today, when we were at the lows around 216, this was actually showing a red or an orange bar peeking to the downside, which was a little bit concerning. And now it's completely gone, maybe with the recent rally that we had towards the end of the day. So take that for what it's worth. That's a good sign, at least for the bulls. It's a long video, holy shit. But that's important to understand. So it's still showing momentum building up, apparently. So I'm not really sure what to make of that at this point, because to me, this is the momentum. It has exploded. But I can't, according to this, not so much just yet. So we'll see how that comes into fruition as well, right? But overall, this is my overall targets, right? So we talked about the 220s. I said was my first main target. Not likely, but it is a target, right? The next, of course, is the 200-day moving average, which is right here. That's my next target, right? Decent chance of bouncing and maybe bottoming. I don't think it'll bottom here, but at least we might get some bounce at the very least. Next target, like I talked about, is about 210 to 200. It's a 0.5 retracement, strong support area, strong psychological level as well as 200. Holds the inverted bullish head and shoulders pattern, my main target. Next, 180s. Entering bearish territory, but volume profile increases a lot once again. And we retest a large blue line, that which is a strong support as well, which is going to be this blue line right here, right? Which we already technically did back here. Next is the 150s, I believe is the worst case realistic target that plays out the potential bear flag drop from the large channel we were in that I talked about on the weekly. And this is the worst case scenario that I talked about, double digits for Tesla, $70 per share. This is everything goes wrong with Tesla. The macroeconomics continues to worsen, or at least stays this bad for a longer period of time, but most likely substantially worse. This is where things really go bad, just everywhere, not just Tesla, just in the world. I think this is the lowest chance of happening, but it's not zero. And like I said, it's worth mentioning in my opinion. But I want to cut off the video there because I can ramble about this for a lot. There's a lot to talk about. This is a crazy day, crazy momentum. But overall, there's also a last chance potential that we overall make a potential double bottom here. So we go like this, make a little M, double bottom right here, and then we make our way back up as well. Also a possibility. There's a lot of things that can happen here. But those are all the scenarios that you want to be paying attention to, and then starting to see which ones really are looking like they're taking into fruition, because there's a lot of things that can happen here. This is a pretty substantial drop. I'm still bullish, man. Short term I'm bearish. Short term I'm definitely bearish, but long term I'm very bullish, and I'm just using this as an opportunity to accumulate more shares that I wanted to before we rallied up way too soon, and I will continue to do so up down to 150s if we actually even get there. But that's kind of what I am seeing. Long video. Hopefully you stuck around to the end. If you did, pat yourself on the back. I appreciate you being here, and I appreciate you staying until the end. But either way, thanks for watching, and I'll see you tomorrow. Peace.